Thank you so much for attending my PowerPoint presentation on every type of Wall Street bets trader explained. WSB is a degenerate swamp of gamblers, lost souls, and people begging the markets to save them from their own poor financial decisions. It's like a zoo for people with room temperature IQs. That's why in today's video, we're going to go over every type of trader and completely explain them. During the pandemic, the global stock market experienced a historically bizarre, central bank-fueled bull market. It was an era defined by stimulus checks, commission-free mobile trading apps, and instant gratification. This volatile environment birthed the doomed beginner. These inexperienced retail investors skipped the paper trading simulators entirely, funding real brokerage accounts with hard-earned savings to chase screenshots of overnight wealth. They lacked any basic understanding of complex financial instruments like implied volatility, leverage, or options decay. But because the charts only went up, these rookies mistook an unusual macroeconomic cycle for personal investing genius. They bought into highly volatile assets at the absolute peak of public attention, completely unaware that a sudden shift in the market would bankrupt them. Forum veterans know this tragic cycle all too well. They watched a trader in his late teens get lucky early on, turning a few $1,000s into a massive six-figure fortune, only to increase his position sizes, lose his head, and watch the entire sum collapse within days. But the absolute peak of this tragedy belongs to a pandemic-era rookie who bypassed holding actual underlying stock entirely, gambling his entire $500,000 portfolio on American Airlines options, and watching the entire sum evaporate overnight. While some beginners blow up instantly, others exit early out of pure terror. To the wider Wall Street bets community, there is no greater sin than letting fear dictate your trades, a weakness they mock ruthlessly with toilet paper emojis. This is the paper hands panic seller. When volatility spikes, their survival instinct completely overrides any sense of forum loyalty. One dip, one red candle, complete panic. These ultra-fearful traders are known to enter highly volatile positions and panic sell them off within literal minutes just to secure tiny, insignificant gains. They are motivated entirely by fear, uncertainty, and a desperate urge to cut losses at the first sign of red, completely missing the eventual rebound. While the forum teases them as toilet paper hands who crumple under the slightest pressure, some realists on the board defend the move. For many of these traders, cashing out early has nothing to do with cowardice. It's simply a matter of absolute financial necessity rather than mere fear. But if you aren't panic selling, you're probably spending so much time staring at charts that your domestic life takes a weird turn. Day trading is an isolating, obsessive pursuit, and joking about your wife finding a boyfriend is the ultimate self-deprecating coping mechanism to deal with that isolation. The running joke of waiting for a wife's boyfriend to hand out a weekly allowance has transcended the forum, becoming a massive staple of real-world day trading merchandise and apparel. It's a brilliant, dark defense mechanism. Traders openly joke about handing their meager trading gains directly to him, turning their financial ruin into a shared domestic comedy. Instead of mourning their blown-up portfolios, they laugh at the absurdity of staring at red and green candles all day while their actual lives crumble around them. It's bizarre, it's pathetic, and it's exactly how the forum survives its own worst instincts. When individual traders stop obsessing over their own households, they band together into a legendary collective. Most traditional investors operate as lone wolves, obsessing over their personal balance sheets and individual returns. But there is a faction of retail traders who rejected that isolation, banding together to form a raw, unified force waging a populist war against Wall Street hedge funds. They call themselves apes. The ape identity is so core to the community's culture that it's immortalized in pretty much all of their signature memes. Buying and holding heavily shorted stocks like GameStop, these traders weaponize their collective ignorance. They proudly embrace the label of dumb money, using their sheer numbers to force massive, historic market movements. Traditional valuation metrics mean absolutely nothing to them. They only care about solidarity, chaos, and making institutional short sellers bleed. If you are watching this instead of checking your bleeding portfolio, take a second to subscribe. It's free, and it keeps you locked into the madness. Within this collective, the absolute badge of honor isn't just standing together, it's refusing to let go when the ship starts sinking. Diamond Hands is a simple concept. You buy an asset, and you absolutely refuse to sell it, no matter how catastrophic the charts look. No panic, no selling, no hesitation. You hold through extreme volatility, turning sheer stubbornness into the community's ultimate moral virtue. The term itself refers to the physical strength of diamonds, representing the grit required to watch millions vanish without pressing the sell button. You buy the dip while the rest of the market panics, trusting that holding is a viable strategy for those who lack deep market knowledge but trust the collective. But while the forum celebrates this as a badge of populist courage, veteran members point out a harsh reality. Being able to hold a crashing, illiquid asset for years without needing to cash out is actually a luxury of privilege. However, there is a razor-thin line between holding with resolve and holding all the way to absolute zero. You might think holding a falling stock only hurts meme stock speculators, but this financial tragedy has infected almost every corner of modern investing. This is the territory of the ultimate bag holder, the tragic counterpart to the diamond-handed hero. They get swept up in peak hype, buying an asset at the absolute top of public attention and hold it all the way down to zero. The term has expanded far beyond meme stocks, widely used to describe victims stuck holding worthless junior bonds of defaulted companies and failed crypto coins. It's a brutal lesson in market psychology. They buy with the sole intention of flipping the asset to someone else for a higher price, only to watch the liquidity dry up. They are left holding a completely worthless position, acting as the exit liquidity for smarter, faster money. Back in the day, this one user started posting some incredibly detailed research on GameStop, betting a ton of money that the company was way undervalued. This was the work of the DD Deep Diver. DD is the community shorthand for due diligence, and these researchers provide the intellectual weight that elevates mindless gambling into a coordinated, market-moving force. While the forum is famous for crude jokes, members treat well-written due diligence threads as sacred texts, rallying behind them under the banner of Apes Together Strong. The deep diver spends hours analyzing corporate balance sheets, short interest ratios, and institutional vulnerabilities to find structural weaknesses. They gave ordinary retail investors the analytical ammunition needed to challenge multi-billion-dollar hedge funds. The archetype peaked with Keith Gill, whose legendary GameStop research ultimately forced him to testify before a U.S. congressional committee alongside the chief executive officers of Reddit and Robinhood. While some rely on mountain loads of research, others skip the reading entirely and bet it all on a single flip of a coin. Spending hours reading corporate balance sheets is a waste of time when the entire stock market is just a casino. The YOLO gambler is the purest expression of the forum's nihilistic culture, betting an entire net worth on a single options trade for an all-or-nothing outcome. The term YOLO on the forum means a total refusal to diversify, forcing the trader to accept either immediate generational wealth or complete, unmitigated bankruptcy. No hedges, no safe index funds, no risk management, just pure, unadulterated chaos. They possess the highest risk tolerance in the market, placing their entire life savings on a single stock or options contract. It's a binary outcome. You either secure legendary wealth or you lose every single penny with absolutely nothing in between. If betting everything on a single stock isn't fast enough, there is a subculture that demands the clock run out in mere hours. These zero DTE options are pretty much the absolute extreme of stock market velocity. These contracts expire on the very same day they are purchased, trading long-term potential for immediate dopamine hits. They are highly volatile and incredibly cheap, allowing a trader to control massive positions with tiny amounts of capital. Traditional finance professionals view this rapid-fire gambling as financial suicide because options decay rapidly as the expiration hour approaches, but the zero DTE addict is completely hooked on the leverage. The forum views these plays with a mixture of awe and terror. We saw this play out when an inexperienced novice lost their entire savings on their first day of trading options by buying short-dated GameStop contracts. But the ultimate cautionary tale is a legendary addict who took out a second mortgage on his home to trade highly volatile options, turning thousands into millions before refusing to cash out and watching the entire fortune evaporate in hours. But while the gamblers chase vertical green spikes, a cynical faction of the subreddit wants to watch the entire market burn. If you want to get laughed out of the daily discussion thread, try posting a sensible, long-term bull thesis during a market downturn. The community has a highly cynical faction dedicated entirely to betting on market crashes, commonly referred to by the slang term gay bears. This group completely rejects the subreddit's natural bullish optimism, actively taking short positions and buying put options in hopes that the market falls. They spend their days hunting for signs of systemic collapse, eagerly waiting to profit from falling stock prices. While the term is frequently used as a general insult across the forum, these bears wear it as a badge of honor. They are the ultimate contrarians, standing in direct opposition to the traders hoping for stocks to go to the moon. Whether you bet on the market crashing or soaring, the ultimate rite of passage on WSB is displaying your absolute destruction for the world to see. One famous trader, using the username HateMyDarnJob, lost his entire life savings after switching to options trading to escape his regular employment, leading the forum to joke that he had successfully upgraded his regular shift to a much longer work shift. This is the tragic world of the lost porn legend. In a complete inversion of traditional investing culture, these legends achieve elite status on the forum by parading their catastrophic, life-ruining financial failures. One legendary loser posted a $250,000 crash and received an officially bewildered letter from Fidelity asking if this absolute wipeout was consistent with his goals. Showing off these devastating red charts from mobile brokerage accounts serves as a bizarre psychological coping mechanism. It's a form of modern stoicism, allowing traders to laugh at their own misery before others can mock them. The community values pure, unadulterated commitment to the cause over basic financial prudence, comfort praising these wiped out users as kings. This morbid fascination is so deep that another investor promised the forum he would perform a highly graphic, painful act of physical self-mutilation if GameStop closed below a certain target price, which it did. But for every tragic sacrifice on the altar of loss, there is one rare lottery winner who actually escapes the matrix. Most retail options plays have a near certain probability of expiring completely worthless, leaving the average trader broke. Yet, the game porn champion exists as the elusive lottery winner of the forum, displaying vertical green charts that prove retail traders can beat the institutional elite. These legendary victories serve as the ultimate proof of concept for the forum's high-risk ethos, keeping millions of retail investors hooked on the dream of quick wealth. They are celebrated as retail warriors who took back wealth from Wall Street, but the line between legendary wealth and total ruin remains paper thin. One famous champion turned tens of thousands of dollars into a multi-million-dollar fortune, only to keep trading and lose almost his entire gains in a single week. But the ultimate dream is realized by a jet engine factory worker named James, who spent 2 decades coding jet engine parts at an aerospace company, only to turn a tiny options play on his kitchen table into tens of thousands, completely rewriting his financial future. And with that, our tour of the Wall Street Bets trading floor comes to an end. Thanks for watching and subscribe.